Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It podcast. My name is Randy Smith, and I'll be your host today. And really excited to have Christian Cardamone with us today. Christian is a commercial broker, and he's the founder of Aloha Wilmington Real Estate. He specializes in boutique property management, sustainable development, and innovative property transformations. He personally owns and manages 65 properties across multifamily, industrial, office, and vacation assets. So, Christian, welcome to the show.
Awesome. Thanks for having me, Randy. It's a pleasure to be here, and I really appreciate you giving me the time to meet your audience.
Yeah, absolutely. I'm excited to dig in. You've got a really interesting background and a really cool story. I think our listeners are going to love it. So let's kick it off like we always do. Can you share your perspective on today's market and how you think that could affect passive investment opportunities out there in real estate?
Sure. Yeah. So, I think we're in a very unique climate. I'm a very excited investor right now. I think we have a strong tailwind. And there's been so much uncertainty in the marketplace, after the pandemic, then through the kind of tumultuous political climate we've had in this election. So many folks have had so many excuses to be kind of on the sidelines or say, I'm waiting for this or that or the other thing, that I think now, and there's been so much cash being built up along the side and the whole time, I think there's going to be a big deployment of capital into the markets. So I think there's a lot of opportunity. Now, it's unique because interest rates, as of now, the end of November, have yet to really reflect a really attractive environment for investors to hop into. But the creative folks who have been investing the whole time have just been sharpening their skills the whole time. I think we'll find some new products kind of hit the market. There's been a lot of folks getting into syndication, which is probably made the ones who are already good have to get better. But also, I think that folks need to be mindful of who they're doing business with now more than ever, because there are so many more players in the space. But honestly, man, I'm excited. I think there's a lot. Real estate, we're in the right room. There's a lot of wealth to be built, and it's like choose your own adventure. So as long as you know what you're doing and you're in it for the long haul, I think you're on the right bus.
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
Yeah, no, I think you and I are in alignment on that. When everybody was super excited to be jumping in back in 20 and 21 and 22, it's probably not the time to be jumping in. But now when everybody's scared, now is actually the time. So I think you hit the nail on the head. Choose the right operators, jump in. And I think you're going to do very, very well over the next 5 to 7 years for sure. So, Well, let's back up a little bit. I gave a very brief intro of you as we got started here, but can you tell the audience a little bit more about yourself and kind of your path to where you are today?
Absolutely. Yeah. So I born in upstate New York and moved down to Wilmington, North Carolina in 1996. So have been here, went through 1 year of high school really quickly, and then stayed and went to University of North Carolina at Wilmington. Got my undergrad there in communication studies. Took me a couple of years, tried pretty much every major you could think of. And got out and got into the bar business, was bartending for a while, and always had kind of an entrepreneurial spirit. I owe that to my parents, who pretty much always worked for themselves in some capacity. So rather than work for the guy that owned the bar, I got some friends together and we opened our own bar and ran that for 7 years. And we did an exit there, which was great. Kind of along that same timeline, got my real estate license and had bought my first house in college, renting out the rooms, making some positive cash flow, realizing this is just an awesome concept, really.
Yeah.
It was house hacking before that was like a term. Then decided to rent out all the rooms and then use the positive cash flow to go rent a house on the beach. So then I really thought I was living it up.
Living large.
Yep. And so I was like, I have to do more of this. So getting my real estate license, I wanted to kind of have some inside baseball, and getting a license seemed like the best way to do that. And the rest is pretty much been history as far as my brokerage career. I got in 2006-07 when the fish were like jumping in the boat. So made six figures my first year and made, rookie of the year with REMAX, and just thought this is going to be easy, And then the bottom dropped out, had just a tremendous financial meltdown, went rags to riches to rags again, and just decided, I guess didn't really give myself an option, just stayed in and kept kind of grinding the whole time. Immediately started rebuilding back and collecting assets again as soon as I possibly could through all sorts of creative measures, and knew that what had got me there, that was the same lane I wanted to stay in. So just use that experience to kind of continue to hone. Got my contractor's license, started building and developing, dabbling in commercial real estate, and man, it's such a great industry. There's so many different ways to make a living, to make a great living, to help people. I'm so excited by it all the time. So here we are now. Started managing properties along the way for friends and family who saw what I was doing. And in real estate, people always think you're doing better than you are. So I use that to my advantage. And people, I'd help take their properties and manage them, and then provide results and performance for them. So it was the self-fulfilling prophecy that came true. So started my commercial property management firm, Aloha Wilmington Real Estate, and that's been great. And so here I am now, and just loving it and trying to decide what's the next shiny object in real estate that I can go and start
Sure.
learn about.
So yeah, I think in the intro we shared, you've got 65, you personally have 65 properties, and it's kind of all different types of asset classes. So it goes against this idea of like jumping in and getting to know something perfectly and going deep. You've actually gone wide and tried a bunch of different asset classes. Can you tell me why you spread it across so many different asset classes, or was it just opportunity driven as you found those over the years?
It was exactly that. It was opportunity driven. And everything that came along, I would look, and I kind of started with single family, like most folks do. And then I learned about commercial, and then I learned about some multifamily, and then I learned about some industrial and some flex, and then some mobile home parks and things. Every time I discovered a new asset class, I just jumped into it head first. And if it appealed to me, I wanted to learn about it, get good enough at it, and then try and purchase something in that realm. Now, going wide has served me as an investor, but I think it's become pretty clear to me now that going deep is my next endeavor, because I think to really master something, that's the path. And I've been like a jack of all trades in real estate, but now my focus is leaning into, I want to, I guess I said it before, the shiny object syndrome has always kind of worked, but now I'm looking for the next thing to really find and develop on a deeper level, since I feel I've kind of dabbled in those things.
So as a commercial broker, did you focus on like full spectrum as well, or were you focused on one asset class as a commercial broker as well?
Well, our market's pretty small, so we don't have a lot of specializations in Wilmington. We have about 250, 300,000 people here in our MSA. So most commercial brokers, there's a handful that really just do that specifically. There's not really enough business to just be like a retail guy, just be like an industrial flex guy, or just be an office guy. So, and we don't have all different types of specializations as well, because we're a small town and we're coastal. But we do have mainly what I've have experience in is flex industrial, office retail, and some multifamily. So I know some other things out there, but those are kind of where I've had good expertise.
And so do you focus just in your MSA is where you're buying assets?
For the most part, yeah. I've done one deal that was in South Carolina, down in Florence, and that was an experience. But that's as far as I've gone with my own money.
Yeah, and I think it's interesting. I grew up in much smaller town than even what you're talking about. And you're right. It seems like in those markets you have generalist in many areas, but you can be extremely successful in that because it's a smaller market, and you probably know all of the big players there, all of the big assets. So it's much easier to get your hands around a number of different asset classes in that type of market versus here in Phoenix. If you were to do onesie twosie stuff in 5 or 6 different asset classes, I would imagine it would be much harder in a much larger MSA to do something like that. So that's interesting. Okay. Yeah. So now I know we were speaking beforehand and you mentioned that kind of like myself, when you're doing something, you're probably talking to everybody you know about it. Next thing you know, people want to start coming to you because they want to get involved. And you've been able to bring some investors along with you on some of those projects. Can you talk about kind of that process and how that evolved and maybe what some of those assets or investments look like for them?
Sure. Yeah. So my first kind of deal with partners in general or investors where I had sold an asset to a gentleman and then was going to help kind of set them up with general contractor, the rehabilitation, and then ultimately I was going to release it when they were done and then help dispose of it. And kind of through that process, we got really close because there's a lot of homework being done, due diligence. We were going through the federal tax credit program for historic renovation. And at a certain point, they as him and his wife, they just said, can you come on as a partner with this? And we want you just to kind of shepherd us through this thing. And so that was awesome because it was, I thought I was proud of myself for selling them the asset. This was a long time ago. And now I said, oh my gosh, I'm going to have a chance to own this asset. And so I was really excited. But it was a little bit overwhelming in the sense that this was the first time I was responsible for someone else's money. And that's a big responsibility that is not to be taken lightly, in my opinion. And my integrity was on the line. And so I took it very seriously. And so we've renovated the asset, leased it up, disposed of it, had a 7-figure profit on the exit of that, which was just phenomenal. And then we exchanged that into another property that did a quick value add, disposed of that, and exchanged it into 2 other assets. And I was able to increase my equity position with them as we went. And then the last 2 that we held together basically have been kind of development projects that were value add commercial properties, and it's been a good experience. Learned quite a lot along the way.
Yeah, and I would imagine that investor is pretty pleased with the results as well. That they came to you initially just buying a property, and that it's evolved now into I think you mentioned like an 8-figure portfolio at this point, correct?
It has, yeah. And I think, I would say I've been fortunate in the sense that as a broker, that's been, I've been working with investors my whole real estate career for the most part, but I've never gone out and tried to raise money. I've almost done it kind of laterally where I've helped them acquire the asset, and then multiple occasions where that investor has said, that just turns into a partnership. Because I get very familiar with the asset during the due diligence process and acquisition, and then I help them kind of formulate a plan for what's the horizon for this, and then how we can dispose of it if we are, or what's the strategy. And more often than not, I love real estate, so I'd like to be a part of as many deals as I can. That is organically turned into getting equity in it, and then at that point taking control of it, management, and running with it. So.
Yeah, and I think you're in a unique situation as well, where like partner selection is so important. So it's not only the asset, but it's the partners that you're working with as well, and you get to really see how those people show up during the negotiation period when you're buying the asset. And while you might fall in love with an asset, you might not fall in love with the partnership. So you kind of have a unique situation where you can just bow out and they move on with the acquisition after you complete that transaction. But if you do find those jewels or those gems of potential partnerships, then you're in a very unique situation to partner with them and go on. So have you done transactions where you had initially gone into it thinking that you were going to form a partnership and then you stepped away from it? Or have they all been pretty well vetted on the front end before you got down that?
No, I would say most of them have been successful and they've been good. But I've had a couple opportunities to get in, and then just like you said, knowing this has happened to me multiple times, and I never really solicit it or offer it. But through the process of meeting these folks, touring properties, identifying, then offering, contracting, due diligence, I'm seeing what kind of business they run, how they are as investors. So it's almost like it's reverse. I'm betting them, even though they haven't even offered me a position in, because I'm seeing like, are these like shrewd investors who want to like stomp on tenants' throats and squeeze every drop out of a deal? Or are they the kind of folks who see something and see its potential, or take my feedback earnestly and say, wow, that's great. I can see their kind of vision through a transaction because I've generally got 30, 60, sometimes 90 days to work alongside them. So you're right. Like at the end of the day, I could be like, this isn't a deal I would take no matter what.
Sure.
Just based on personality or how many
Sure.
people how many cooks are in the kitchen and just how they make decisions.
Yeah. Very interesting. Okay. Well, so now looking at your portfolio today, it sounds like you're starting to hone in on really like taking the rifle approach versus the shotgun, identify a specific asset class and go a little bit deeper. With your knowledge of the market, where we're at in the economy and some of the trends that we're seeing, and your knowledge of all of the different asset classes, what are you honing in on? Have you honed in on a specific asset class, or are there going to be a few still?
So right now, real estate, in my opinion, is it's local when you're in the trenches here. So the stuff that's going on in some of these bigger markets, sometimes it's good for kind of the global view of the market, but here, I'm focusing in on some multifamily and some commercial flex and industrial stuff. That seems to be what the biggest need is immediately. And so I see the most opportunity there. So that is right now where my focus is. And then within that, there's still kind of a berth to maneuver and decide how laser focused I'm going to be. But those are the two I have active projects in right now.
Can you talk a little bit about the flex? We don't talk a lot about that, and I think it's an asset class that many don't even really know what it is. So can you kind of share with the audience a little bit more details about that?
Absolutely. Yeah. And I think this will be one thing I would keep an eye out for, and I start to pay attention to as an investor, someone who likes to have passive income in, multifamily has a lot of attention on it. It has had historically. It's not new by any means, but it's finally like getting introduced to the investment public. And basically, for the most part, there's different scales and grades of it, but it's basically a commercial, like industrial flex building would be something with an office or a retail component in the front and then warehouse in the back. So most of the time, they're metal buildings or these big monster like tilt ups. Those are kind of the more bigger scale industrial ones. But Tony had mentioned it, my gentleman buddy who I mentioned before, he said the mullet concept, and I'd never heard that before, and I loved it.
Business in the front, right?
Business in the front, party in the back, and it really is. It's great. It's just very flexible space. That's why they say flex, because you could use it for office, retail, manufacturing, and then you've got this big broad warehouse in the back for a multitude of uses. So that's in a nutshell what it is.
Yeah. So I spent 11 years working for a large credit card company, and my job was to go out and meet with all of our clients and teach them how to use our tools. And I would meet with everything from pool repair guys to real estate organizations to machinery companies, all in this flex space where, just like you said, business in the front and warehouse in the back. Some of them would be like 60, 70% office. So they needed more office, but they still needed some warehousing in the back. Or maybe they've got a bunch of trucks that they work out of the shop. So I spent 10 years running in and out of those things all over, Arizona, Nevada, Utah, New Mexico. And like there is a huge demand. And as we're shifting into, I think we're shifting into a time where small business is going to come back and just flourish extremely well. And this is where they thrive in this environment. So I think this flex space is going to be a really, really hot space to be in years to come. So yeah, glad to hear you're looking at focusing on that.
Yeah, I like to hear that from you, another professional in the industry, just to kind of corroborate that, because again, we're a smaller market, so the things that I'm seeing out in these bigger markets is representative of what we're seeing here, which is awesome. And you're right, it is the every person needs a roof over their head. They need shelter. So you see, single family homes will always have a place for me in my investment portfolio, but this is basically the business version of a roof over your head.
It really is. Yep.
And so that's why this is, if you look at it kind of through that lens, it's almost as essential.
I agree. And it's the starting spot for small business before they become very large and buy their own facilities. Mm-hmm. But you can see varying sizes of these as well, where people can actually run from one address to 2 or 3, 4 side by side as they grow before they go out and take on the much bigger pieces. So yeah. Now, can you talk about kind of the structure of those? Like multifamily, you've got property management, you've got renovations. So you're doing some type of value add generally in these or over time that you do. You've got a bunch of tenants. So in this flex space, you might have, 10, 12, 15 different condos, some of them call. But what does the business plan look like those? Or is there a lot of expenses that you're having to cover? Or is this more like triple net, or what does that structure look like?
Most of the time, and that's kind of the beauty of it, is because it's in that kind of commercial realm. So it's almost goes without saying that these are going to be triple net leases. So you are going to push back the majority of the spend and almost all the expenses back onto the tenants. And that's understood going into it. And it's not uncommon. It's not a hard sell. And if they are condos, sometimes they have like COA fees and stuff like that even those can be wrapped into the net expenses. So they're really easy assets to own. And that's why I think the syndicators that are getting into that space, I think will just deliver phenomenal results for their clients and investors, because they're so easy to pro forma and underwrite, because they're like Legos. You buy these buildings, they're metal, like I said, or the tilt up ones. They're easy to estimate the construction, and as long as the infrastructure is there, then you can build these assets and put them into service. And as long as the demand is there, vacancy is kind of the only variable, because depending on your market, the tenants are responsible for everything. If they're metal, they have 100-year roofs, and there's really not much maintenance to do. So unlike an apartment that can go from Class A to Class B to Class C as decades go by, some of the assets here in my market that were built in the 80s are still commanding premium, like Class A prices here for these flex things. So it's just beautiful.
Yeah, no, and as far as from an ownership standpoint, you might have a little bit of common area maintenance. You might have some blacktop repairs, but other than that, like there's really, like, you're not responsible for anything. And even when you have turnover, like most of these, if it's a basic office in the front and warehouse in the back, there's not a whole lot that needs to be done to those when people move out, I can imagine, right? Because people moving in are going to do their own TI.
That's almost always how it goes. And even sometimes if you are generous and you offer a TIA for the tenants, they want to do it on their own. So they'll come in. So it's like you don't have to go and modernize these units every time just to keep up with the trends and the competition coming to market like you do in residential. You always have to be, the prettiest girl at the dance to command the attention of the tenants in these other asset classes. But with this, it's just like sometimes, proverbially you show up in overalls with, mud on your shoes and you're still going to get the high rent just the same way. So
yeah. So the average guy, like the pretty girl at the dance versus the average looking guy like myself, we could do okay in that space, is what you're saying.
I feel like I'm looking in the mirror if I,
You're right. You're right. You're right. So that's great. Well, cool. Well, it sounds, I love that space. I've been watching it more and more. I'm learning more and more from my guest as well about that. And there just don't seem to be a lot of people that are going after that arena from a syndication standpoint at this point. Or if there are, they're not hanging out in my circles, which I don't know why, quite frankly. Well, very good. So I know you've had some individual investors and stuff, but you're looking at potentially syndication as well, about bringing on more quantity of investors into some of your deals. So what is that big deal or that next deal in that space look like for you? Is this like a $5 million asset, 10 million? Are you going to need to bring 2-3 million to the table? What does the average deal look like that you're looking at?
So the kind of the closest one to me right now that I'm working on is a flex industrial kind of development that I've got. We've already acquired the land. It's just under an acre, so it's kind of like an infill project, but in a great corridor with it's already gotten it entitled already. And so now it had originally started off as a multifamily play. That's why we took down the land, because we thought that was going to be the best way to introduce some workforce housing to increase the density. And then just the kind of tide turned a little bit, and it seemed like the lower hanging fruit that was going to provide as much or more of a return was going to go this flex direction.
Interesting.
So I think the more I learned about that over the last couple of years, and really I saw the demand where it just seemed like there was more and more demand for this asset class in our area, because our local market is growing almost exponentially as well. So that obviously helps. But we're in TRC with the city now, and this is going to be about a $4 million project. And so we're going to figure out if we want to bring in, it's my brother-in-law owns it with me. So we'll figure out if we want to go and bring investors into this. I think we likely will, just because it's big enough to where we'll need support. It's such an attractive project that, you'd like to do it all on your own. We may do that, but I like the idea of this would be a great jump off point to deliver something that we know works. We know we can do it. We started it as our own project, and by inviting investors in, we could almost put our best foot forward, so that if this was going to be something we wash, rinse, and repeat, then we've got the performance history.
And so you were starting this as a multifamily infill, and you had to go through a rezoning process, I would imagine, to shift over to this flex type of offering?
With this one, we actually didn't. We were fortunate because they were rezoning it. It had been proposed to be rezoned by the city in advance when we acquired it. So by virtue of that happening, it entitled us. It basically pushed us into entitlement by some changes they made with local ordinances that were already kind of teed up. So it was a little inside trading that worked out to our benefits.
Don't say that word. Yeah, we don't want don't want to bring any attention to it. But no, that's. I
was born under a lucky star. That's what my parents always tell me. So
there you go. Yeah, interesting. And so, what is when you look at a build cost? If this was infill multifamily, if it was a $4 million project under flex, what would it have been under multifamily ballpark? Just curious.
Well, we're looking from almost like if you want to just get simple with it from a price per foot, I guess what we're saying is the price per foot for like a turnkey development for this multifamily is, including civil and architectural, is like 135, 140. The buildings themselves are like 60 to 75. But we got a lot of stormwater, a lot of civil, like that. Whereas the multifamily stuff is, it was in the mid twos to build. And so, depending on the class of the product, obviously that has a pendulum consideration. Yeah. There's lots of different ways to go with that. But we were going to have some commercial elements on the first floor. It's a four-story building, so it's going to essentially be kind of mixed use. They have incentives with the city. If you offer a percentage of commercial, then they'll allow the density to be higher.
Interesting.
And also with if you designate 10% of it to workforce housing, then the density can be unlimited. Then you're just restricted by the footprint size and the height restrictions. So,
okay.
Yeah.
Whereas on the flex space, you basically throw some concrete and blacktop in metal buildings, and it's probably built much, much quicker, I would imagine.
Yeah. You have the time is money. So if you can get something done in literally 7-8 months versus, 18 months, that has real tangible return on it.
And will you hold these after development, or will you sell it?
The plan will be to hold these. I think we're in a great area, and there's even it's wild when I say flex, it really is flex in the sense that there's some folks have spaces around here where there'll be private citizens that will rent them for like a man cave or like a she shed. They'll park their fancy car in them, set up a pool table, and just because a lot of folks don't have that kind of storage or a private garage or something like that, so it's just a very appealing
Yeah.
product.
Yeah, I've seen in Vegas specifically, actually here in Arizona as well, you'll see restaurants in them from time to time, diners, that type of stuff as well, because all of those people that work in those facilities in the surrounding areas, they've got to eat somewhere too. So yeah, it's a good, cheap solution for restaurants. So interesting. Okay. Well, very good. Well, gosh, we burned through a half an hour already, and I'd love to still hear. I know we talked a lot about like you're hypersensitive on the location just because you're in this small market. But what are your thoughts on the economy, where we're headed, maybe the next 4 years with the new administration coming in? What are your thoughts about the coming years?
Well, like I mentioned before, I'm definitely optimistic. I'm always an optimistic investor. I'm very bullish on real estate right now, probably more than ever, just because the administration we all know is. I know there's been like rumblings, and I don't know if it's just speculation, but the bonus depreciation could become another big piece of the conversation being reintroduced, possibly even retroactively, which would be phenomenal. So, I mean, that's one just piece of the puzzle that people need to recognize is such a huge part of investing. And so I love that. So like I said, always optimistic on investing. The real players who have been doing it a long time, if the market's good or the market's bad, they're participating. The folks that are sitting on the side waiting and watching they're always going to be late to the party. So my MO is always just stay in the game, pay attention, see what's happening, and if you're not actively taking swings, you're at least taking notes.
I like that. Very good.
Mm-hmm.
Well, very good, Christian. Well, this has been a fun conversation. I'm excited that we connected. No doubt the next handful of years are going to be really exciting for you and the team. So congratulations on the success up to this point. And I'm sure the next decade's going to look very, very bright for you. So thanks so much for being on the show.
Awesome, Randy. Thanks so much for having me. Have a great one. Take care.
Actually, you know what? I'm sorry, I got ahead of myself here. I do have a couple of questions I'd like to ask everybody before we hop off. So if you have a couple of minutes, do you mind if we jump into those?
Absolutely, yeah.
All right. So since the audience is geared, it is more of the newer passive investor. They may or may not have had active investment in the background. Do you have any educational resources or ideas or suggestions for people to start or continue their education journey in this space?
So I think it seems to me that podcasts are probably the best resource right now for this because it's not mainstream. So for investors to really do the right homework on syndicators and passive investments, Bigger Pockets is kind of a generic resource. It's really good, and there's a lot of good intel to kind of glean from that. But I kind of look for podcasts. I started listening to the folks that were on Bigger Pockets, and as they branched off to guests that they had and the guests that they had. And so paying attention to that seems to be the best resource because a lot of the big passive investor folks are not out there, running ads, and you have to seek them out because they're not out there trying to sell you something. It's almost like reverse. So I think you have to be very active, and probably the harder they are to find, the better they are.
Generally with people with the huge platforms and the big marketing budgets that's their business. They're a marketing business, right?
Yeah. And I think you should be very mindful and wary of who you're doing business with.
So are there any favorite podcasts that you're listening to now? Could be real estate or non-real estate related.
I listen to Dan Martell. I like him a lot. He wrote the book, Buy Back Your Time. So I love following him and his content. The Rich Summers Report has been one that I've been turned on to, which is neat. And they do like kind of boutique hotel investing. And then I like Brandon Turner's new content, The Better Life Tribe. And he's a big syndicator. And he's a good example of someone who's got a big presence, but also seems to provide pretty good results regularly and has a good reputation. So he could be kind of the outlier.
I would agree.
And so, but I'm always looking, and your podcast, man, honestly has been great. And I've listened to, I think, 4 episodes already, and I'm going to definitely go down the rabbit hole. So, keep up the good work, because this is the stuff you got to go out and seek.
I appreciate it. Thank you. All right. So let's see here. For folks, we didn't talk about this a ton, but for folks that are trying to improve their due diligence process, what would you say? What's a good due diligence question that they should be asking as they're vetting operators to place capital into passive deals?
So I think time in the market is one of the biggest things. Anybody that's I certainly wouldn't look down on anyone that's just been in it for 2 to 3 or 5 years. But if I was going to put any substantial amount of money in with the group, I would want a decade or more performance, just because I think they need to have gone through at least one cycle to really know. Because perfect example, like I mentioned before, when I got into real estate, before the bottom dropped out, I thought it was all rainbows and waterfalls. So if someone had given me money, I would have lost it immediately when, I lost everything. So someone that's gone through a cycle or two, old guys really know their stuff a lot. The older and women too, just someone who's been through a couple of the gray hairs generally are there for a reason. And so that's one thing, time in the market. Not to say that a newer syndication couldn't really be wildly successful, but that's one thing I look at. And obviously some investors that have been there before, it's important to talk to other folks in some of the past projects that have gone full cycle.
And not necessarily just the ones that the operator wants to refer you to, but finding other investors organically that have invested in their deals, I think is even more powerful, right?
Absolutely.
And I'm glad you said that. I agree with you. I was hiking with another GoBro this morning, and we were talking about when you first get started, just like yourself, just like me years and years ago, like you just don't know what you don't know. And if everything's gone well and there have been home runs and no issues whatsoever, you think you've got the God complex, you can do anything. But then when you get something left field that you weren't expecting, you just can't know how to deal with those issues unless you've been through them before. So really good advice. Really good advice. Thank you for that. All right. So let's finish with just a couple of fun ones here. You and I are both of a community that talk about bucket list items. So is there a bucket list item you've recently checked off your list or one you're hoping to in the near future?
Oh, man, I had 2 this year. Went to an F1 race in Miami. That was awesome.
Nice.
Love Formula One racing. And then I flew an airplane. So that was very cool. Looking to get my pilot's license at some point. And finally, with the support of my wife, got my discovery flight, and then have done a couple since. So that was definitely has been a bucket list item.
Fantastic. I flew during our Scottsdale event that we had just a couple of months ago.
Oh, yeah.
I flew with a GoBro up to the Grand Canyon in Sedona for breakfast. Like, where else can you do stuff like that?
Dude,
right?
Yeah.
Yeah. So very cool. And then our final question, which comes back to the roots of what we're doing here. If you had $100,000 you had to invest today and you couldn't put it in one of your own deals, where would you put it?
Honestly, the group that you mentioned before, GoButtons, that we're both parts of, has been just such a tremendous resource for me. Just knowing that there's groups out there with guys that are squared away, that are really good people doing good things and big things, excites me. So I probably would speak to someone in that group, someone who has a lot of wisdom, expertise. And if I was going to put it into a passive channel, it probably would be a flex, some version of a flex product, syndication, and I would do it with a smile on my face.
Love it. Awesome. Well, Christian, this has been great. It's been good to get to know you. Like I said, I feel like we're brothers.
Yeah, man.
We've got the bald head and the beard, but it's been great getting to know you a little bit more. I'm sure I will continue this, and I'll get to know you even better in the future. So thanks so much for being on the show, though.
Anytime, Randy. See you soon, man. Thank you so much for having me. I appreciate it big time.
Awesome. All right. And to the audience, as always, we encourage you to continue that education journey in the passive investment space. More importantly than that, though, we encourage you to make a decision to invest in your first or your next passive investment. I am convinced that once you do, you will be so happy that you did and just wish you had started sooner. So be sure to join us again here next Thursday for another great episode, and be sure to like and subscribe on whatever channel you're listening to. And thank you so much for being with us here today.
Well, there you have it, ladies and gentlemen, another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.